Welcome to Dealer Talk with Jen Suzuki, where inspiration meets action. This is your spot to grow, level up, and lead with fresh ideas. From sales to service, from frontline teams to executives, we're dropping weekly knowledge and insight to keep your store sharp, relevant, and profitable. Let's get into it. Welcome back, listeners. Today on Dealer Talk, I'm with Keith from Presidio. And this is an investment advisory team. They have been quietly shaping that next wave of dealer tech. And I'm very excited to bring this angle to the table today because we're going to dig into how capital plus industry relationships actually speed up adoption of AI and what Presidio looks for in the founders that they're supporting, even looking at the funding models that dealers really should be demanding when they start looking at companies, especially AI companies out there that seem to be, coming on the scene every single day. We want to look at, what we want to know more about how that next generation of AI, how it gets from pilot to profit in your dealerships. And anyways, let me just introduce Keith. Welcome.
Well, Jen, thanks for having me on today.
You were the Asbury CFO for many years. Is that correct?
I was with the company for 15 years.
Well, I'm going to tell you, I chased them to be on this podcast. So I am very happy to have you here today. Even though you're with Presidio now, you've had quite a record, a lot of achievements out there, and that's a big one there too. And Presidio is, maybe people haven't heard it so much as I do hear it, but you guys are supporting a lot of technology companies out there. Do you want to just share like a little piece of what you guys are doing and how it's evolving?
Yeah, from a broader perspective, Presidio, we have two big pieces of our business. We do a lot of dealership M&A advisory. That's kind of our bread and butter that we built the business on. And for the last 5 years now, we've been building a tech practice. And in that tech practice, we look for early stage companies that we could arrange capital for, very strategic capital. And we also help with M&A inside the technology sector. 100% of what we do is all automotive. If you look at the backgrounds of the folks that are here at Presidio, the majority of our careers, for me, it's been 22 years in and around automotive.
Great.
And our president's the same way, and Brody Cobb, our CEO and founder, is the same way. So we've spent our whole careers in this industry.
Well, there's a lot of companies that I use in dealerships, and they were funded. They have been supported by you guys. And this is what I really wanted to share some time with you and learn a little about. And maybe you could just tell us how Presidio first evaluates a automotive, tech company, a startup out there. What are maybe some of the non-negotiables that you want to see from like a founder, even the product and even just that early customer traction before you even start talking valuation?
Yeah, we like to get to know founders and companies for a good amount of time before in the market raising capital. So we'll start even 6 months in advance, getting to know them, getting to know their product, understanding their go-to-market strategy. One of the most important things we do is making customer calls. So we will call customers, whoever will speak to us will find out everything possible about that product. And most importantly, about the measurable impact that product's having on dealership operations. From there, we go to, we do extensive research and background checks on the founder or the CEO. Have they had prior success and track record of scaling companies? And then another part that a lot of people don't think about is we take a really deep look at the cap table. Who are the current investors? Are they strategic investors? Will they bring extra value beyond capital? And none of these companies, Jen, we all think this happens in a straight line. You start a company and the next thing you know, you're over 1,000 dealerships and everything's great. Talk to a founder. That never happens. There's going to be hard times. And we need to know that the capital that's there is going to be supportive during those hard times. So the question is, will they be around and available and have the ability to be supportive when things get tough?
I think that's really important, precisely because I always look at this conversation from a dealer perspective. And I think a lot of dealers right now are really starting to get switched on, especially the more progressive dealers that I work with. And they're starting to ask me different questions. Questions like, well, who is this company? Who is their founder? Are they in automotive? Did they work in a dealership before? And it's funny because we used to say these things about people like me who are educators, trainers, coaches, well, did they sell cars before? And I think this is what you're saying is that is because there is a lot of AI companies and there's a lot of technology out there that, and it's spreading rampant like a fire that's just doing inbound like appointment setting. And I look at a lot of these founders because I'm bringing them on my podcast, and some of them never been in the automotive field before. And I say, well, how can they do this? And so I see the value in that.
Yeah, when you think about it, if you look back at the history of automotive tech, a lot of it did come from people who are in and around the industry. What we see now is there's incredible technology being developed, and really about, automotive generally is a little bit behind in adoption relative to the general, population and technology adopters that are out there. And I think tech companies and entrepreneurs are starting to look at this industry, which is 18,000 strong franchise dealers.
Yes.
Let alone independents, which brings it to 40 plus thousand potential customers that are built in the United States, and saying, wow, that's a huge market for us, and we could really bring innovation and drive, whether it's revenue growth, employee productivity, or whatever you're looking to accomplish. But I think that is an interesting dynamic where, we are a little bit, I've been around the dealer world for a while. We want people to speak our language, and we want people to understand our business. And when they don't speak our language, or they don't understand the business intimately, that could really be a barrier for adoption and real proliferation of the technology in the industry.
I just want to emphasize that, because a lot of times I'll work with tech in the stores too, and I'm watching them adopt. I'm watching them execute. I'm actually helping them modify how they update their processes accordingly so that everybody is making progress. And if you didn't, I find that the softwares, and especially the engineers, when they have worked in the dealership and with the teams, that they seem to create a better product because they're actually working with the front line. Well, anyways, you're evaluating tech all the time, and you're looking at a lot of different companies, and I'm just very curious to hear about the numbers that matter the most to you. So, and then again, we're thinking from this dealer perspective here, and maybe they could be asking better questions to the companies that they're doing business with. And quite frankly, when they have a company like Presidio behind it, that for me strengthens the brand. And when you tell us intel about how you're identifying who you're going to invest in, I think this is actually a vetting process that dealers can look at and say, all right, they got that behind them. So tell me like a little bit more about the cost to acquire a dealer, or, like a dealer client, or maybe activation rates, or recurring rev, or retention, things like this. Help us understand what you actually analyze.
Yeah, I'll keep it pretty simple on this. And really it's the question we're trying to answer, right? So we look at revenue growth, and is it recurring revenue? And what we're really asking there, is there a strong demand for the product, right? We look at customer churn, and while the company can be growing a lot, if they're losing a lot of their customers, that's telling us something else. So are they delivering the value proposition that they promised to the customer? And then if you look at, we get a lot of financial information. So we're looking at things like pathway to profitability. How much capital do they need? What runway do they need to build their business? Because a lot of these early stage companies are negative cash flow for a period of time until they scale their business. So what does that look like? And who's the right partner for that capital need? And then there is, from a tech standpoint, just general technology analysis, there's a rule of 40, which kind of takes a couple of these concepts and blends them together. So if you take your revenue growth year over year, your percent revenue growth year over year, that's one capture. And the other side of that is your profitability, which is your profit margin. So if you take those two percentages and add them together, and you get above 40%, that shows that you have a very healthy software company. So we're looking at what point do they get to that rule of 40 as well. Those are the first couple of things we look at on every deal.
I really appreciate that insight, because I think a lot of times we don't even think about these things too. We just hear the industry clouding $1 billion valuation, and all of these big numbers out there. But, from your seat, what valuation factors truly matter in automotive tech and which don't?
Well, first of all, on the billion dollar valuation front, for a long time, a couple decades in the industry, I've heard from many dealers, I helped build that software. I taught them everything they needed to know. But when they exited, I didn't win. So part of our philosophy with this early stage investing and allow dealers coming into these cap tables are they help to direct the company, they help with product, they help with feedback loops, but the dealers also now have a chance to win around some of these technology advancements, which we love to see. Dealers are used to operating off cash flow. Everything in a dealership is gross profit and cash flow generation. Everybody gets paid that way. And that's largely how dealerships are valued. They're on a multiple of cash flow. Technology is a bit different, and it's all based on revenue, recurring revenue. And it's based on what level of revenue they're currently at that point in time on an annualized basis. And then the market will put a multiple on that revenue. And it will look at other characteristics like what's the revenue growth, what's the churn, things we've talked about, what are the future growth opportunities, what does the acquirer look to do with that asset, and how can they integrate it across their tech stacks? Those are all things that are contemplated. But you're right, if you grow a company and you can get that company up to $100 million, $150 million in revenue, you very well might have a $1 billion company. It sounds crazy, but that's how the math works.
Yeah, well, dealers are always asking me, well, how do I know that this company is going to last? How do I know they're going to stick around? How do I know that they're not going to, they're not going to just take the first offer and bounce, because I think that what we're starting to see, this is what's happening in a lot of my stores, is that particularly my progressive stores, where they started using, say, an AI tech a few years ago, still infancy right now. And maybe some things didn't work. Maybe they weren't prepared for adopting something like this because there was going to be a reshaping of roles or processes or such like this. And now, now there's more products on the scene and they want to try different things. And then the next thing you know, they're not getting the support they need. They don't like this product. This product's not working the way that they want it to work. And I do find that this dealer who has been messing around with certain products in a category, that they now are starting to say, well, how do I know these people are going to last? How do I know this company is going to be here? Because I'm going to change all my processes. I'm going to change my compensation programs. I'm going to change our goals, our checkpoints, and really even reshape some of our management's roles. And so how do I know a startup's going to still be here in 2 to 3 years? What financial or operational indicators should they look for?
Yeah, well, first of all, it's a great question. The truth is early stage venture investing has a certain level of failure rate. Some of these companies are not going to make it. It's just the truth. You think about AI and the proliferation of AI tools, they're not, at the end of the day, they're not all going to make it the full way. So it's a very good question to ask. And especially with the advent of AI and the adoption of AI, things are changing very quickly.
Yes.
So I think it's a very good question. I would just say, do your due diligence. Just like we diligence a company from a financial perspective, do your due diligence. And I'll go back to what we do first. We make customer calls. I'm sure any dealer adopting a new technology is going to do that, right? But ask the hard questions. Try to understand what the benefit is. Try to understand if there's real value being added to the ecosystem in a dealership. And you see that from a bunch of customer calls, you're going to know that they're adding value. And when you add value, you can charge money for the value you're providing. So it's really that simple. But I think, customer calls are first and foremost, but there's other things you can do. A lot of the investors that come into these technology companies, a lot of that information is public through press releases. You could understand who's supporting them, and that could give you more assurance. And I think, there's two things that can happen, obviously, with the tech, or three things that can happen with the tech company. They could continue to grow and grow and grow. They could fail, or they could be acquired. And on the acquired side, we don't see that as a bad thing. We see that as actually a pretty good thing, because typically that acquirer has a very specific strategic purpose, and they're going to infuse capital to even drive greater value to that goal.
Yeah. No, that's really interesting that you say that. It got me thinking a little bit off the side here. But I do notice that a lot of times people will think, the product is always supposed to stay the same. And that's what's so great about an acquisition, is that a lot of times they dump more resources into being able to expand the product offerings and such. And I want to throw, this is more personal. It just got me thinking, because, I work with a lot of these companies that you guys are supporting, and I work the sales processes frontline with the teams, and you talk revenue, and you've said a lot of things about numbers. But on the other side of the coin, I wonder what your thought is on this. And you may not be able to tie it back to a KPI or a rev gen thing, but a lot of times I find myself saying the customer likes it. The customer said they like this process because of those customer calls. I call them and say, what do you think about this? Hey, what do you think about our company? Was this an enhancement, when we did this? And this is leveraging technology, to do some of the jobs that our people were once doing. And, you want to make sure that you're not missing the mark when you're leveraging AI, if they're taking on some of the mundane tasks and such. But when the customer says to you, I really appreciated that process. Calling in, for example, and not having to spend a lot of time to set their appointment. Customers will say this to me. They'll say, well, when I talk to somebody, I find that, I'm at work and I'm talking a little more than I really want to. And I really like the AI because it makes things more time efficient. And you can't tie that back to something, but does that matter?
Oh, it's essential. Like we have an ethos for Presidio. We truly believe the customer always wins. And those that listen to the customer voice are going to win, and those that don't will lose over time. And it's really that simple. And the customer has high expectations today. They have very high expectations of their time matters more than ever. They don't want to be inconvenienced. They want to be treated like an individual. That's important. They want to be direct and to the point. A lot of them don't want to negotiate anymore as this younger generation grows into our customer base.
Well, they're using ChatGPT now to negotiate their deals. And by the way, ChatGPT seems to be on our side currently.
Yeah. So no, we think that this industry's it's been incredible over time, but it's moving much more towards a customer-centric business model.
Yeah. I'm glad to hear you say that, because I think we always focus on numbers, especially when it comes to things like investment or acquisition and things like this. But I don't ever want to lose sight of the fact that at the end of the day, the customer has to say they like it. The customer has to say that was better, and it's hard to tie back some of that stuff. But when you meet founders, tell me like a little more about the most common products or go-to market mistakes that you happen to see from maybe when they try to inject a new tool or tech piece or AI even into their process. You might even see that slow dealer adoption. And what advice would you give them?
Yeah, I think I break it down to two common mistakes. I'll take one from the capital perspective, and then I'll hit your question too. From a capital perspective, these founders have worked very hard to launch their companies. Okay. And they know that retaining their equity ownership of that entity over time is really what's going to drive their long-term value for themselves and their families. But I would just say we're a big believer on the bigger pie mentality, where you get the right investors in. Sure, you give up some of your cap table, but you grow a bigger company because of it. And so the mistake that's made there sometimes is people, founders undercapitalized because they don't want to give up that equity. They undercapitalize their company, and they spend more time then dealing with their investor base and raising capital than they do running the company. And that's kind of where we help them through that process. So that's one aside. But as far as go-to-market approach, I think it's, especially for outsiders, if you think you need a sales team, I think you're wrong. You need a customer success team. And that's what you were alluding to before. Yes. Right? Yeah, the sale matters, but it only matters if they're able to integrate the solution and drive success. Else you're going to end up with churn.
Retention.
That's what drives retention. So that customer success mindset is essential to any technology company, but especially for dealers.
Excellent angles here. And I see it. I envision it. I have these same exact conversations with, even like there's a service manager that just comes to mind really quick. And we were having this exact conversation. And it's like, when he says, I've got to pick a company that has a great support team. That was the biggest mistake that I made. That's what he told me. He said, yeah, they have a big name. Yeah, they have a lot of people, but you can't get a hold of them. And it's not working for me. And if the product is making mistakes and such, which we all anticipate, if there's nobody there to talk to me to try to fix it, they don't care. And I said, that is it right there. Yeah, it's not about the sales. You said it best. It's about the support.
Yep. Customer success. That's what matters.
Yeah, right. I love it. Well, maybe you could give me like a real example, maybe something that you've experienced firsthand. And you don't have to name any companies or anything like that, but maybe you made it an investment directly and it led to a better dealer outcome. And it's like kind of like what you just said earlier. It's like, a lot of times you want to see customers or companies even see as a positive as when they get acquired. And wow, we have so many more resources now and we can do bigger things. And I always wonder when because they're so proud when it's such a flex. It's like, oh, we just got X amount of dollars, or we just got refunded. And it's like, what did that do to the product? What's the dealer outcome? How do they benefit from, a cash drop like that?
Yeah, I'll bring it back a little bit to the type of capital that we do bring into these companies. I mentioned dealer capital, and
Mhm.
what we ask for right up front from the dealers is we don't want you to be passive investors. We want you to be active. And when we say active in this case, what we mean is we want feedback loops for the management teams. There's nothing better than customer feedback.
Oh.
So they have direct pipelines back into those CEOs and founders to drive product innovation, to
Mhm.
address issues that are coming up, to modify the product for a specific circumstance.
Okay.
We were talking earlier. We did raise capital for Stella AI, so I'll
Mhm.
mention that.
Mhm.
And we've been with the company for a while and helping them through several rounds of investment. When it started, it was an inbound service scheduling tool via telephony AI, and it did a
Mhm.
very good job at that. Still does. And that
Mhm.
really is a customer service and efficiency exercise, right? The customer's
Yes.
being handled well. In a minute and a half, I could be on a call and I have my service appointment booked and I'm all ready to go without ever talking to a human.
Mm.
And it's incredibly effective and drove productivity for the dealership. But as we listen to those feedback loops, and as Rich Sam listened to those feedback loops from those investor
That's the
dealers,
CEO.
the
Mhm.
CEO, correct?
Mhm. Mhm.
He took that big AI engine and he pointed it outwards, and now making outward bound calls on service follow-ups to drive
Mhm.
revenue. So
Mhm.
now we're doing two really good things for the dealer, right? We're driving productivity, we're taking care of the customer, and we're driving revenue back into the parts and service business.
Yeah, that's a great example. And in particularly with seeing a leadership change and seeing a change in even resources, but being able to tackle another angle that's so important to the overall profitability of the store. Retention for the dealer, when you're making outbound calls, and I think they're starting to tap more now into this. It's really expanded the product offerings, right? Being able to do outbound, bringing customers back into the store and such. So you're looking for, more conversions, and you can increase more conversions by having more call types.
Absolutely. And we know as dealers we make a lot of our money in the parts and service business and retain
Yes.
those customers longer term, and they become new vehicle and used vehicle customers again. So that
Yeah.
retention is
Yeah.
incredibly important.
Yep. So what's the outlook for 2026? And people always say, what does it look like in 3 to 5 years? I'm like, that is an old question. You only say 3 to 6 months now. So, 2026 is right around the corner here. But tell me, what's the outlook look like regarding tech and the impact on dealership operations?
Yeah, I think there's a couple of themes we have to keep in mind. First of all, I mentioned before, customer-centric business model. Everything's migrating towards the customer being at the
Yes, I
center.
agree.
I think if you go back 30 years, it's a dealer-centric business model, and we've been migrating towards this customer-centric. And customers are very convenience focused today, and you need to look no further than DoorDash. This is a company that simply just coordinates delivery of things to your house or wherever
Mm.
you are. And that company, so if you look at the capital markets, that company's valued at $95 billion. I mean, this is
Wow.
a massive valuation for coordinating the delivery of things,
Wow.
and that's all convenience for the customer, right? So when we look at a couple companies in the space, we do work with Spiffy,
Hmm.
who's enabling mobile service for dealers.
Hmm.
They have a
Hmm.
white label solution now.
Hmm.
We have a company that we know well. We don't work with, but we're think very highly of Hop Drive, which is pickup and delivery service, so
Okay.
that
Hmm.
customers can have that convenience. So there's going to be this continuous move towards convenience focus. I think the other part of convenience, and as our digital native, uh, age groups become more and more of our customer base,
Hmm.
they're gonna expect the online purchasing experience. They're gonna expect to easily research, look at, understand, buy, even select F&I products online.
Yeah.
And they're an outsider to our franchise dealer friends, but Carvana has proven that people will buy online, and they've also proven that they can generate very good grosses online, including F&I. So they've kind of proven that out. And literally this week, they broke $100 billion market cap.
I know.
So the markets are telling
It's
us
impressive.
that this is a viable way of doing business, and they think there's additional growth. So I know a lot of the publics have their own platforms that they develop for that. We're keeping a close look, and we know the management team at Amazon Autos very well.
Right.
I know for dealers, they're trying to understand what this all means from Amazon.
Right.
What are they trying to accomplish? We've done a lot of research on that. I'm happy to talk to any dealer that would like to speak about that. But we do think the marketplace concept has the ability both to improve the customer experience to where they want it to be. And we actually believe a lot of this AI technology development, marketplaces, all these big pieces of tech that are coming to this industry have the ability to really drive productivity for the first time. You know, I'm sure you've heard it, Jen. We still sell 10 cars per salesperson per month.
Right.
It's been that way forever. When is it ever going to change?
When is that going to go up?
You know, I was looking at the public data, and the public companies, about 65 to 70% of their gross profit is paid out in SG&A, and 2/3 of that is people. And I'm not talking about tech labor, that's already in your gross profit. So 2/3 of the expense structure of the dealerships are paid out in people costs. And this next wave of tech that's coming, I think is going to do two things. It's going to improve the customer experience, and they're going to get a service and experience that they want. And it's going to allow the dealers, maybe for the first time, to really drive productivity in their team.
This is exciting. You have got me all pumped. I mean, it's very inspirational to hear that. And listen, there's so much evolving right now. And I think this automotive couldn't be in a more exciting time than what we're about to do in 2026. And I just really appreciate you, Keith, your expertise, your experience. I mean, your passion. Did you say this was your first podcast?
My first podcast.
You're excellent. I've really enjoyed this conversation. People, it's always hard to keep up with me. And they're always like, you have so much energy. I'm like, look at Keith.
Well, I appreciate you having me on.
Yeah, well, it was practical. It was eye-opening, and especially for founders, and dealers thinking on the same lines of, this is bigger than, does this product just work? I think that for dealers and leaders out there, it's about outcomes. It's not always the flashy. We're trying to, look at all of these components that you've given us, Keith, here, and really we should go back and shortlist it, make a little checklist on the non-negotiables that you mentioned. And I think that all of this is very helpful as we go into NADA show coming up, and we start thinking about who do we want to look at from a dealer perspective, and what companies are growing and accelerating and meeting their investor needs, and that always tells the story. So thank you so much, Keith, for shedding the light here today.
Oh, great. I look forward to seeing you in February in Las Vegas.
I'll be there. Thanks, everyone, for listening to Dealer Talk with Jen Suzuki. Don't forget, my weekly live classes are designed to keep your team fired up, skilled up, and focused on results. Subscribe right now at edealersolutions.com. See ya!